Pleasure. Now, third quarter GDP at 7.1%. Was that a surprise for you?
I think it was a surprise to the upside. When you look at the Q-on-Q growth, that actually surprised to the upside from a contraction in the last quarter Q-on-Q to strong growth this quarter Q-on-Q. And that was because the economy is normalizing, I think, at a faster pace than many people had priced in. So that's really what drove our revision upwards for this year. The fact that we've seen evidence of normalizing activity at a sooner pace than we had considered. So when you look at things like mobility data or the traffic data, as you mentioned, there's clearly signs that the economy is getting back on track, and particularly given the Philippine economy's dependency on domestic activity to drive growth, that's quite a big change and led us to revise up our 2021 outlook.
Okay, given that, how are things looking up at least for the fourth quarter based on how things are developing here?
Yeah, the fourth quarter, we expect activity to remain fairly strong. There will be that factor that, the re-loosening or the loosening of measures that occurred in Q3 won't play as big a part in driving growth in Q4, but we will see that return to confidence from relaxed measures, and generally activity beginning to pick up, particularly on the consumer side, which should boost economic activity more broadly. Other things like delayed projects and just generally the logistical side of things should improve, which allows economic activity to remain fairly healthy going through the Q4.
Mm-hmm. Now, question is, are there any downside risks here that we have to be keeping an eye on?
Yeah, there definitely are. I mean, the vaccination program has been ramped up in recent months, but there still remains that lack of vaccinations across certain parts of the country and regions where vaccination rates aren't as high as others. And that discrepancy does leave the economy vulnerable to outbreaks and potential disruptions to travel between regions. And we can't rule out some further disruptions from the pandemic. On the other side, there's the external factors that I think we have to be aware of. Financial markets have been becoming increasingly hawkish in recent weeks and months. And that, again, could tighten. We could see a tightening of external financing conditions, which ultimately weighs on investment sentiment and overall economic confidence.
Okay, Michael, also what's interesting to note here with your report is that you at least made a downward revision for 2022. What prompted you to reach that decision, please?
Yeah, so we revised growth down from 6.8% to 6.5% in 2022. And there were three factors behind that. Firstly, just base effects. High growth this year will mean slightly lower growth next year from the base effects perspective, and that normalization playing out sooner than we had thought. The second point is monetary conditions. So we expect inflation to run a bit higher going into next year. And what that's doing is shrinking real wages. We haven't seen real wage growth return to pre-pandemic levels, and that's going to weigh on household consumption somewhat. So you're not going to see consumer spending as strong as it could potentially be if inflation wasn't running as elevated. Particularly commodity prices as well will have some impact on the imports bill. And then the third factor I'd note is some external headwinds. I mentioned them a bit earlier, but there's the external financing side of things. A stronger dollar, Fed hikes could result in some pressure on emerging market assets, which eventually translates into weaker investment and general impact on business sentiment. But then there's also the issue of slowing growth in China. A slowdown in Chinese growth has a knock-on effect for regional trade activity and generally prices and demand for goods, and that in turn would also, weigh on exports growth and general business optimism. So we see those three factors as slightly tempering that outlook, but we do expect the economy to pick up pace in 2022, as shown by our forecast.